Hi, and welcome to Coffee Talk, Sportico's video podcast about the intersection of sports and finance. I'm Brendan Coffey, Sportico's finance reporter, and you can find my work and the work of my colleagues on Apple News, Yahoo, on the Bloomberg Terminal, and of course at Sportico.com. Joining me on Coffee Talk today is Michael Proman. Michael's the portfolio manager of the Scrum Ventures Sports and Entertainment Fund. It's a venture capital fund and that just closed its first fundraise, $68 million. Before joining Scrum, Michael worked for the NBA, Coca-Cola, and even started his own company, Options It, which focused on options trading and which he sold some years back. Michael, thank you for joining me today.
Thank you. Thanks for having me.
Yeah, well, so Scrum Ventures, the sports and entertainment fund, you just closed your first fundraise on that. Why don't you tell me a little bit about that?
Yeah, it's a team effort, I think, to start with. At Scrum, we've been investing now for 12, 13 years. Originally as generalist investors with four funds that are actively being deployed. And, we decided, probably 3, 4 years ago, right around the inflection point of the Olympics coming to Tokyo, with our strong kind of LP base that is based in Japan. There was a lot of curiosity and interest in going deeper, particularly in this vertical. There's obviously a lot of opportunity both here in North America, but certainly in markets like Japan. And getting this fund off the ground was, it took some time. Obviously, the pandemic set us back a little bit, like it did for a lot of folks. But I couldn't be more thrilled right now. I have two wonderful partners working alongside with me. I think we all have complementary skill sets and superpowers. And the surprising thing to a lot of people is we've already made 16 portfolio investments in just over a 2-year period. So, we're kind of halfway through at this point in terms of initial checks, and we know there's a lot of great companies out there, and we're really thrilled for kind of what's next.
I saw a list of some of your limited partners, some of your investors. Some big names in there: Sega and Sumitomo and Asahi, if I recall correctly. Are all your investors Japanese based, Japan based?
Yeah, all of our investors in this fund are Japanese corporates for the most part. That's consistent with many of our funds at Scrum, although there are some, obviously outsiders as well. I think what we found here is funds really start and end with strong narratives. And for us, it's about sourcing exceptional opportunities, traditionally outside of the Japanese market, although we have made investments in Japan, and figured out ways to kind of, add value both domestically, but then more importantly, where it's applicable, be that gateway for those companies into a growth market like Japan. And I think that's very attractive to the early stage community, particularly companies that have already graduated into that kind of Series A, Series B, and they're looking for new markets and growth opportunities.
That's interesting. So is the aim to bring these sports technologies, entertainment technologies, whatever it is you're investing in, to kind of get them into Japan, or is it the idea that your investors want exposure to all this outside of Japan, or is it a little bit of both?
It's probably the latter, right? I think it's the both. It's not a prerequisite, Japan, market entry or having some roots in the market as an investment requirement by any means. There's certainly companies in our portfolio that have aspirations of being in the Japanese market. Maybe it's a year from now, maybe it's 5 years from now. And then there are probably some that will never get there, and that's perfectly fine. For us, we want to kind of spread our wings as broadly as possible. We know that there are a lot of really engaging technologies out there, both within the vertical, but then a lot that also play kind of on the peripheral of sport, entertainment, and something else. When I look at our Japanese partners, many of them are large conglomerates, right? So they're not necessarily looking for this particular technology or this interest. They have broad-based interests and appeal. And I think our fund mirrors their level of interest. And certainly it takes root from our generalist investment days of trying to really get curious about technologies that we feel have particular applicability towards this vertical.
Is it just my misimpression, my wrong impression that at least in the sort of sports area, that Japanese investors haven't been very active outside of Japan, or at least maybe not active in North America?
Yeah, I mean, I think it's early innings, right? To pardon the sports cliche here. I think,
Always
a
good.
lot of the time when you have a milestone event like the Olympics come to your home market, a lot of people associate that with kind of the pinnacle, right? In the case of Japan, this was kind of an inflection point of there's so much more opportunity and room to run. And I think it exposed a lot of really interesting topics and questions that now a lot of our LPs are wanting to kind of solve for. There's definitely a level of curiosity and interest that we admire. I think if you're going to be an investor, if you're going to be an operator, there's got to be curiosity. You've got to be open to new ideas and things that kind of test your comfort zone. And that's what I'm most thrilled about.
Yeah. So regarding the sort of your first central focus of sports tech. I don't want to make the error of assuming everyone knows what that is. I actually had a guy into my house, a contractor, and I
Yeah.
told him I write about sports business, and he basically asked, "Oh, so about Mike Vrabel becoming coach of the Patriots." But it's more than that, and sports tech is I suppose can be defined a few different ways. Why don't you tell me what you see sports tech as? How do you define it?
Yeah, I love that question, by the way, because, I think outside the industry, you get typecasted a lot of the time as, oh, you're taking minority stakes in, professional franchises. And sports technology is massive, and it's constantly reinventing itself. I think the definition, if you want to go back there, has evolved significantly since I was an operator, 15, 20 years ago, and working at places like the NBA and Coca-Cola before that, is that, we're not looking, at least our focus, I should say, is not in endemic sports technology. So a sensor that goes in a football or a soccer ball, or an app that helps me, do push-ups better. That's interesting, and I'm sure somebody out there will find it investable. But we look at it from a venture lens, right? And we say to ourselves, at a bare minimum, is this an opportunity that can get to $100 million in revenue? Is there a 10x potential here on an exit? And more than likely, we're looking for 20x or plus at the stage in which we're investing, right? So I think one of the challenges I've always seen throughout my career in this industry is that the industry, even though it has evolved, and even though the budgets are significantly bigger than they were before, it's still very small in comparison to mobility or fintech or healthcare or other enterprise SaaS, which traditional venture capitalists try to focus their time and energy around. When you can get outside of a core customer base of teams, leagues, and properties, you actually have real meaningful revenue opportunities associated with that. And yet at the same time, that base, including some of our consumer base or fans, is really critical to ensuring success. But ultimately, the venture backability that we feel is really going to take hold by expanding the TAM. So our focus, Brendan, is really around what are those technologies that are relevant to the vertical, that support various use cases, needs, pain points, you name it, but at the same time have the ability to transcend this particular space and open up kind of new markets and addressable markets.
Yeah, that's an interesting point. What's an example of that? You must
Yeah.
have something in the portfolio
Oh,
right now that.
absolutely. And in fact, it's kind of, I wouldn't say it's a prerequisite always to our investments, but we place a particular emphasis on that. And I think, a couple stand out to me. One is a company called Oslo Sleep. Now, you and I know elite athletes, they need their sleep. Recovery is critical for performance optimization. But, I'm not trying to kind of, throw you under the bus here, Brennan, but you're probably not an elite athlete, neither am I, but we still need a good night's sleep because I got to tell you, if you wake up and you don't get that, you feel like trash, and it just sets the tone for the entire day. So Oslo makes sleep buds, right? And you might say, is that really even a sports tech company or an entertainment tech company? And the answer is probably no. But the way in which we're defining this industry, we believe that it has a lot of relevance and applicability to the vertical.
Interesting, interesting. And I was a great Little League baseball player, by the way.
Yeah.
But um,
Yeah. Yeah, there you go.
uh, oh, but to your point, I think a thing that's often surprising to folks and was to me is how small sports is when you consider it like a business sector. And I've been a
Yep.
business journalist for 30 years now and covered a lot of different areas and right, the most valuable team in the world, the Dallas Cowboys, they would just be a mid cap stock based on their
Yep.
valuation, right? They would no one would pay any attention to them if they
Yeah.
weren't the
Well,
Dallas
being the Russell
Cowboys.
2000 probably, you
Yeah,
know.
yeah,
Exactly.
huge mind share, small, I guess dollar share. So tell me, how do the world of startups and venture capital seems pretty large, especially your fund, Scrum Ventures Sports and Entertainment is your early stage. So the how do you go about winnowing out what must be an almost dazzling number of options you could go with your investing with your
Yeah, it's a great question, right? So initially out of the gate, when we launched the fund, I think portfolio construction was really critical. It could have been very easy for us to concentrate all of our efforts in betting and gaming or athlete performance technology or this or that. But, I think in any, disciplined approach, you want, a diverse fund. You want to go deep in certain pockets of the vertical, but you certainly want exposure at different stages and in different elements within the sector itself. So, out of the initial 16 investments or portfolio companies we've made, initial checks, three-quarters of those were at kind of late seed, early A, right? So, kind of what we consider product market fit. And I think that to us is probably the most important conversation to be having with early stage founders is, well, we will go earlier at times and certainly we'll go later. Um, where we feel we can add the most value is right as if people are hitting that inflection point where the market has really said, hey, listen, there's something here. It's sticky, it's repeatable, and it has the scale potential. And so, yes, when we get inbounded, we get all kinds of different things. When we go out and we kind of look at various um, portions of the vertical and we do our sector theses and we kind of identify the most attractive opportunities, our focus is traditionally there. So that's probably the first way in which we assess deal flow. Secondly, this is a team sport, and that's probably one of the reasons I love it so much. Is I work alongside some pretty outstanding fund managers from other organizations, and having the opportunity to co-invest with them, to bring different superpowers to the table, to share deal flow, to think about ways that we can make companies better together. Again, like everyone gets motivated by different things. For me, that's kind of one of the top kind of perks of the job is I work with, both on my team and then in the broader kind of ecosystem, some really outstanding people. And I'm really fortunate to say that.
Is that essential to one of your investments? Is to have that ability to have to some extent an active say in what they're doing?
Um, yes and no. I mean, we're not activist investors. We're not micromanagers. I think if you look at the three S's of venture, the sourcing, screening, and supporting, right? I mean, personally, I geek out on the last S because maybe it allows me to put on my operator hat and kind of relive those days. Very nostalgic, right? But at the same time, we all bring something new to the table. And, I say this all the time. People on my team, people in the industry, they run circles around me, right? Intellectually. I'm not going to try to compete against them in that battle. Um, if I were to say, what is my IP? What's the thing that I can bring not only to my organization, but to the companies we invest in and the ones we support? It's the network, it's the relationships. And at, seed and A, it is so critical that you're bringing, basically 100% to those organizations at that time. Once you get into Series B, Series C, and beyond, and growth and stuff like that, then it's just about execution. But trying to figure out how to go from seed to A, that is a bridge that a lot of startups just can never, cross. And I feel like that's kind of where we like to focus our time and energy.
So like seed essentially maybe just a great idea, A being a great idea that is showing some, green shoots essentially in the market. Is that
Absolutely. I
fair
mean,
to say?
people will say all the time, well, we have all these POCs and this and that. Well, POC is great. And I don't want to, downplay the value that those bring. But the real proof is the conversion. And it's not just the conversion of that POC, but it's, are you able to renew that customer? And in some cases on a multi-year basis, are you able to expand the depth of that relationship from a revenue standpoint or just the scope? Those are the kind of indicators to me that says this is healthy revenue versus this is POC revenue. It's very easy to probably window dress as a founder. You can get a lot of one-off deals. Sometimes, that works when you're trying to sell investors. Every investor has a different barometer and a different threshold too. So, what alpha might look like for us is fundamentally different for one of my peers. And so I think, again, so long as there's kind of an open and honest conversation about what we're looking to achieve and is this a mutual fit, that's when the best relationships happen. And I think, that's a big part of what we do is we get to know founders long before they're even pitching us. We can kind of stress test the product. We can talk to people in the industry. We can do things that candidly from a diligence standpoint are a little bit probably more non-traditional than how maybe Venture 1.0 used to think about sourcing.
Okay. Interesting. How much does the more headline stuff that people see every day about the economy and about the big stock market topics like AI
Yep.
these days, how much of that influences what you look at or frames how you look at it, or does it not?
Yes and no. My most critical data point, I would say, is the voice of the customer. And the voice of the customer is oftentimes for an enterprise, a team, a league, a property. On the consumer side, it's a fan maybe, right? And like I want to know what's on their mind. I want to almost play the role of therapist, if to pardon that kind of cliche or pun, and ultimately kind of ask them probing questions and kind of dissect some of their pain points. And oftentimes, market conditions are always top of mind in those types of organizations, or even at the fan or consumer level. And so, a lot of what we do is really like one or two parts sociology and looking at how people engage and looking at how people kind of absorb information. And then one or two parts applying our own thoughts and theses of where this vertical is going or where this trend is coming to, or is this fad or is it fixture, right? And we'll get it right, hopefully, sometime. We'll probably get some wrong, as everybody does. But at the end of the day, I think you always have to kind of look around the table and say kind of who's missing. And, we have a great team, don't get me wrong. We come from very diverse kind of pockets of the industry and perspectives and age and you name it. But having a real conversation with a user or somebody who is a core customer, it doesn't get better than that.
Interesting. And so, what is there in your conversations? Is there a specific area or a technology that's kind of exciting you right now?
Well, I mean, everyone's talking about AI, and how can you not? I think for us, we just made an investment in the AI space that'll get announced here very soon as well. And, we'll continue to source opportunities because we firmly believe that this is, again, very early days for everybody, including the sports and entertainment industry, and how it will disrupt existing business practices and just the future of engagement. So that's always top of the list. I like looking at nascent pockets of the vertical too, right? I always use the kind of example of saying, hey, listen, I'd love to go back to Springfield, Mass. in the 1880s to kind of invest in this thing called basketball, but a little bit too late on that one. But where are those opportunities, say in 40, 50 years, I'll be able to tell my grandkids, I was, first money into this new thing called NIL at the time, and who knows what NIL will be in 40 or 50 years. But the reality is that's super interesting, right? The transformation that's taking place right now in college athletics, these are like milestone types of things that I don't want to say they're not getting the play that they deserve, but I think in kind of retrospective kind of speak, when we look back, we're going to say, oh my God, why didn't we do more? And same thing goes with gaming and betting, and certainly places within the vertical that are fundamentally kind of within the last 5 to 10 year type of opportunities. So I'm a firm believer of, try to get in as early as you can into things that are truly fixture. And I think in sports and entertainment, there are very few things that have completely disrupted the industry or are fundamentally new. I think that those are two examples that we're pretty bullish on.
Interesting, interesting. So it's looking like we have plenty of time recorded here, Michael.
Yeah.
Is there something else you want to discuss?
Yeah, I mean, I think what's also like, I don't really have any agenda to be quite honest here. I think what I love the most about, things is just the changing face of venture and what that means for the industry in general. I think what used to be considered a career that was exclusively kind of roped off for, let's call it X finance or folks with 20 years of, investment banking or private equity experience. I think the future personally, and again, this is one person's opinion, so, mark it as a focus group of one, but is really kind of the ex operators or people who understand verticals in industries better than anybody else and who have lived and breathed those places. So, what I do right now, I mean, 10 years from now, there's no way I could have the job I have because there's so many more impressive people that will be coming into this space in my mind than, washed up, operators and, corporate employees like me.
You're very modest, Michael. I appreciate it. Well, it's been great speaking with you. Thanks for your time.
Yeah, thank you. I really appreciate it.